So, multifamily markets are under a great deal of pressure these days. We hear that vacancy rates in some of the urban markets are tripping at near record lows. Are we seeing the same sort of pressure in secondary markets as we are in urban markets for multifamily?
I think that's a great question and something that our firm has focused on for about the last 6 months to really understand the market and other fundamental dynamics that are going on in Canada and especially the housing crisis and where that's leading to in the secondary markets. And I think if we take a step back, what are the main drivers here? And when you think about the main drivers, we have immigration, we have supply shortages, all leading to an affordability challenge. So when we're looking at these secondary markets as an opportunity for our firm and also how to address the general macro affordability problem here is that's where families are moving to. And why is that happening? So, currently right now, about 250,000 immigrants a year are, immigrating coming to Canada, and the plan and strategy for the country is about double that, about 500,000. And we're, as you just mentioned, we have record low vacancy rates across the country, pretty much irrespective of where across the country, about less than 1%. And in markets that historically have been had higher vacancy rates and less affordability challenges, like Atlantic Canada, we're seeing markets like Halifax being one of the tightest markets in Canada now. So you're seeing these core markets of Toronto, Vancouver, and Montreal, where you had very tough affordability challenges, now dispersing across Canada.
Right. At the heart of a lot of this, as you mentioned, is our supply challenges, bringing on product as that demand gets very strong with immigration. A lot of the urban markets have supply issues that constrain the kind of product that you can build at what price points. What about secondary markets? Are there challenges on the supply side for these secondary markets? Are they similar or different?
The supply challenges are pervasive across the country. And a lot of that is very specific on local governments working with, local to provincial and then federal governments. We haven't really seen, since the MURBS tax incentive, the incentives to spur on supply. And right now in the current debt environment, that it's not stimulating new development, new supply being brought on. So in a lot of these major markets across Canada, the numbers just don't currently pencil. So we have, what's creating the crisis? We have increasing demand and need for housing and new immigrants, and at the same time, it is very difficult to develop and build new product.
Right. And where do you see some of these secondary markets over the long term? Are we going to continue to see pressure on those markets as the urban markets get even more expensive, such that the affordability challenges will be the same between secondary and urban markets, or is that gap going to always kind of remain kind of there?
I personally think that you're always going to have somewhat of a gap, certain markets like Toronto and Vancouver, for the reasons of the dynamic nature and the financial hub and employment hub of Toronto, as well as some of the draws and the nature and the beauty of Vancouver. Those areas are always going to be in significant demand and probably have the greater affordability challenges. But as we see new immigration that's from outside Canada into Canada, like Canadian immigration, inbound immigration, they typically and historically have gone to major markets. So you go to major markets, families start building a community there, but what we're seeing is the affordability is pushing them out quicker and quicker to those suburban and secondary markets. So as that continues to happen, you're starting to see these smaller towns and communities outside of the major markets having very similar challenges.